I think certainly investors will ask a lot more questions with an ongoing SEC investigation. So we're actually modeling the company raising $2 billion in convertible debt in the fourth quarter. It remains to be seen how quickly this SEC probe gets tidied up, but certainly subpoenas have been filed, and even beyond the August 7th tweet, if you go back to the short burn tweet and then the insider buys after that, coupled with the blog acknowledging that he had discussions with the Saudis before, there's certainly a lot more questions above and beyond, in our mind, just above and beyond the $420 target tweet that he, private tweet that he had on August 7th.
What is the damage to the company versus what is the damage to Elon Musk as an individual from an SEC investigation, whatever fines may arise out of an investigation? Could the company actually be insulated?
Yeah, I mean, certainly the board has hired their own attorneys. The company could be exposed, and Elon personally could be exposed. I'm certainly not an attorney and in a best position to address that. But I think more importantly, in the eyes of investors who would be potentially participating in a capital raise, if you were to look at a CEO that is somewhat tarnished here, and then potentially the company having some financial liability as well, right at a critical moment where they're trying to expand internationally, ramp up a Model 3 that's been in ramp up now for about a year and a half. It's certainly challenging. And then you've got $920 million of debt coming due next March. So they're certainly in a box right now and need to execute pretty quickly.
Jeff, if the board rejigged the leadership structure such that you had a new person at the top or alongside or just below Musk who was taking care of all things administrative and corporate, but Musk was still there and still fully committed, what would that mean to your share price target? Would it be a significant game changer or not really?
Yeah, I mean, certainly bringing in someone with high volume automotive manufacturing in our mind, even if it's a COO, would be a step in the right direction. The problems that the company's having seems to be in automation and robotics. That's not something that can quickly be solved. All those robots need to be reprogrammed. So we would still probably take a wait and see approach, especially with the debt coming due. There's a lot of financial liability and burden that the company has over the next 2 to 3 quarters. But it certainly would be a step in the right direction. And then more importantly, back in the spring, the pay package that Elon Musk and the board agreed to, allows him to step down as CEO and move over to some form of a product development role. So whoever this individual is that potentially could be brought in could actually be brought in as a CEO as well.
And Jeff, in terms of the $2 billion in debt that you're forecasting the company will have to raise, it sounds like about $1 billion, about half of that will be allocated toward covering the debt obligations that come due in March.
Yeah, exactly, Melissa. You've got a couple $100 million due this year in 2018, largely from the Solar City debt from that acquisition, and then the 920s due in March. So you are right. About half of it will cover debt, half of it will cover the losses. We're not modeling the company profitable or cash flow positive in the third and fourth quarter. In our view, those are metrics that they can hit towards the middle of 2019. So a few quarters behind Elon's plan.